Thank you, everybody who is tuning in right now from wherever you are, presumably not in Singapore, because we know there's a lot going
No,
on right there as well. But for those of you who are here, thank you for spending some time today. We're going to have an amazing set of speakers and topics to cover here about the trends in tokenization in North America specifically, folks. And of course, we got a great panel, amazing set of speakers here that we're going to hear from Thomas Meyer, a finance veteran who founded Thomas Meyer Investment Management. We got Sharon Noller, serial entrepreneur, DigiX. Ashley Sauday, with a new real estate RWA project called RealReal. Harsh Mohan, another entrepreneur and founder with TOFI24. Gary Rommel, who's an experienced attorney. Is Gary on here? No, not yet here. But instead, we also got Phil Falcone, legendary entrepreneur in the real estate space. And then, of course, Gabriel and Klaus from DigiShares. We're going to actually start off hearing from Klaus, the founder and CEO of DigiShares, here to get started. So let's get into it, shall we? Take it away, Klaus.
thank you very much. Thank you for hosting, and thank you for people to joining, and thanks to all the speakers. Great pleasure to have you here. I will try to share my screen. So just a few words from me before we start up for real. DigiShares is, of course, primarily a white label business, right? So we sell a software solution for end-to-end tokenization of real world assets, real estate assets, funds, commodities, infrastructure, and so on. It's a highly customizable, configurable platform with open APIs. We integrate with many different KYC providers, payment providers, and so on. We also have a huge focus on compliance. So we have a legal presentation here today as well. We have a large network of legal firms around the world that we work with constantly. We have clients in more than 40 countries, so we have a good coverage of the world. And then we're also launching an exchange. The webinar yesterday was actually about the exchange. It's scheduled to launch in Q4 in the US. So we're quite excited about that. And we are signing up the first clients to list their assets on it. In fact, this is the agenda or the schedule for the exchange licenses that we are working on taking out. First one being the US in Q4 this year in collaboration with Texas Capital. Then we are working on a license in South Africa together with a local legal firm, Schindlers, our legal partner in South Africa. They actually already almost have the license, so it's relatively easy for us, I think, to complete the process, and then we'll be able to launch at least in the first half of next year in South Africa and cover possibly the African continent from there. We're also working on the UAE. We have many clients in the UAE. There's a lot of interest in tokenization in general, and there's also, I would say, backing from the government and the regulators and so on to do something there. So due to all that support, we decided to also take out a license in the UAE and run a local instance of the exchange in Dubai or Abu Dhabi. And then we've just joined the European Union Blockchain Sandbox to work together with the European Union on how to sort of license an AMM type exchange within the European Union. So this is more of a legal sort of sandbox, trying to work with several large legal firms on developing sort of a licensing framework for an AMM type exchange in Europe. So that's quite exciting too. We see a number of issues in the tokenization space, and one of them is definitely the lack of liquidity. And in fact, we believe that liquidity will really drive the space longer term when it gets developed. It is really one of the most important aspects of the tokenization and one of the key value drivers. So of course, what we're looking at is to make it possible to list your asset at a fraction of the price compared to New York Stock Exchange and NASDAQ. The blockchain technology will make it much more efficient and less costly. It's important for us to develop the buy side. There's a limited backside in the tokenization buy side in the tokenization space, and we've decided sort of to focus on real estate initially to make it easier for us to reach critical mass. As I think we all know, right, the difficulty of selling an asset is priced into the value. So an asset that is liquid will normally be worth 20 to 30% more than one that is illiquid. So longer term, I think the overall market is moving towards more liquidity, and at some stage it'll be necessary to sort of to make your assets liquid in order to be competitive. This is also what institutional investors prefer. So more money will come in if your asset is liquid. It will allow investors to diversify it increasingly. It will also allow for retail access, global access, and democratization, and so on. And of course, it's also a necessary step to allow for DeFi lending. A DeFi lending contract must have the collateral be liquid, otherwise it cannot be cancelled in case the loan is not paid back. So it is a requirement for assets to be liquid before they can be used in a DeFi lending contract. So that is a necessary step for that. And also, of course, liquidity means that it will be possible to make derivatives, tokenize REITs, and so on sort of higher level assets. These are new slides that we just produced for this webinar, sort of also to illustrate what we are up against in the tokenization space. We constantly work on trying to make the overall sort of workflow and sort of end-to-end capabilities of a tokenization platform like our solution very easy to use, and also sort of plugged in sufficiently into the existing ecosystem, making it easy to reach investors, liquidity venues, and so on, and sort of to exist in a world where we both have fiat and crypto available, fiat and stable coins, and so on. As we see right now, the way that we see it right now is that it's relatively easy to get fiat into our world and into our systems, but getting it out again is hard, right? So it's difficult to get it back into the banking systems and so on. There's a limited number of off-ramps, and banks are hesitant and concerned to receive crypto funds. AML is a big issue. So that's generally a problem for the space and something that we constantly work on together with different payment service providers. So you could say that overall, if you look at the crypto space, right, you can get fiat in, but it's hard to get it out. And the same, of course, will work for the real estate tokens that we create. It's extremely easy to pay for them with crypto and to interact with them with crypto, stable coins, and so on. But if you want to work with fiat, it's much harder. The fiat technology sort of ecosystem, state of the art, is not as well developed, or it's not as easy to use, and doesn't have so much functionality as the crypto space. For instance, we cannot easily track whether payment has gone in if we are in the fiat world. So there's a lot of stuff that becomes harder to do, and generally it's developing quite slowly. But we are working hard on this and making inroads every month. Also, as we discussed, as I mentioned before, the distribution channels for the tokenization ecosystem are not sufficiently well developed yet, and it's something that all of us need to work together on improving. And of course, we have two main distribution channels right now: the crypto ecosystem, which is relatively small, and the traditional capital markets, which is large, of course. And you see them compared here. I think the key parameter, the key difference is that the market size of the crypto ecosystem is maybe $2 trillion US now, and the traditional capital markets is around 100 trillion, so it's 50 times larger. And crypto is primarily retail, individuals, and so on, not so much institutional capital, whereas the reverse is the case for the traditional capital markets. So the structure is quite different. But it's going in the right direction, right? So we see that traditional capital markets are getting connected into what we're doing increasingly. On-off ramps are becoming easier, better to use all the time. The user experience is increasing. Bank adoption is increasing. We're working with a few banks ourselves and speaking to several that are getting into the space. So banks are increasingly offering wallets and so on. It's becoming easier and easier for us, I would say, in the tokenization ecosystem to connect with traditional capital markets. We're getting the CBDCs as well, and that will also help. The same on the crypto side, it's also getting easier, right? Because it's just growing so fast, right? It's growing 40% every year. So the sheer volume or the sheer AUM of the crypto space is going to become larger and larger quite fast. So it will actually provide a decent buy side for us. So that's it for me. I just want to highlight a few events we're doing. So of course we are meeting today, but on October the 10th, we are doing a masterclass in Dubai at the World Token Summit. And then we are running a couple of other webinars later in the year. October 16, we have a presentation from different chains that are sort of betting on the tokenization space. And on November 13, we have presentation from clients in Europe, basically. That's it from my side. Back to you, Hervik.
Oh, that was a phenomenal presentation and breakdown. A great way to introduce this webinar today, I think. But we're not done yet with all the amazing things that DigiShares is up to. We get to hear from Gabriel, who's over here also in Miami with us. We should have had you come over here to the office, man.
That's true.
But next time. But no, you have some amazing news that you announced yesterday as well from the real estate.exchange, and I think you have a presentation on that, so go ahead, take it away.
Yeah, very short presentation, just two slides. Thank you, Herwig. So yeah, real estate.exchange. We've been working on this for a while at DigiShares to provide a real solid competitive trading venue for real estate shares, tokenized real estate shares, and that also is compliant. And so we felt that there was a void in the market. A lot of our clients were asking us for just an easy, straightforward, competitive solution focused on real estate. And so we will be launching in the next couple of months. Yeah, we aim to make it the go-to place to trade tokenized real estate shares. And so we are launching at first in the US. We have a great ATS partner called Texture Capital. Richard was on the webinar yesterday. And so that ensures that we're SEC compliant, basically. So we're doing a deep integration with their system. Everything will be smart contract enabled, of course, the settlement. Investors and issuers, or actually no, only investors will have their self-custodial wallets. You can bring any of the leading self-custodial wallets that are EVM compatible and connect to an atomic swap smart contract, and the settlement is pretty much instantaneous and wallet to wallet. So limiting intermediaries, limiting fees, and just making the experience a whole lot better. On the secondary market, after the 1-year lockup period under US law, you can open up trading to non-accredited investors, even if you do a Reg D or Reg S, so an issuance targeted towards accredited investors or non-US investors. So yeah, so after that 1-year lockup, anybody can trade. And so retail investors are very much welcome to the platform. Yeah, we look to be not only a lot more competitive than NASDAQ and the New York Stock Exchange, as Klaus mentioned, but also as some of the other ATSs in our space, in the tokenized security space. And finally, another thing I'd mention is we're looking to make the user experience much better for the entire ecosystem, and with a focus on KYC. And so we're working with Polygon ID. I believe they rebranded very recently. I forgot their new name, but we're working with them to create a system whereby an investor goes through KYC once with a list of validated providers, like SumSub, for example. And then you would get a token that indicates that you've successfully gone through the KYC. And then once that token is in your wallet, you can, as soon as you connect your wallet to a venue or a platform that accepts the framework, you can just immediately go in. So you don't have to go through KYC over and over again every time you join a new platform. So we've called it Ditto, decentralized ID for tokenization, and we're working closely with Polygon ID and a few KYC providers on that. So it's just a slide to show the structure. So let's say you have a multifamily asset, could be anywhere in the world, but at first to list on Rex, it would have to be a US SPV. And as Klaus said, we're then going to expand to other regions in the world. But let's say, it's a US, it's a Delaware LLC or LP. So this is just the structure of how the primary issuance and secondary trading interact. And so you have a primary issuance platform like DigiShares. The issuer would provide access to their investors so that the investors can get tokens. They wouldn't have to go through KYC again if they already did that. So you can just bulk whitelist all of the investors. They would come in, get the tokens delivered to their wallets, and then on a voluntary basis, if the investor wants to exit, they would simply log on to realestate.exchange, place a sell limit order. So it's important to note here that the US version of Rex will be an order book, so traditional bids and asks, and not an automated market maker. We're looking at other jurisdictions for the AMM because it's not accepted yet for securities in the US, but we're working in the sandbox in Europe and in the UAE and South Africa to get an AMM going over there. But so here it's an order book, and so you place a sell limit order. I want to sell 1,000 tokens at $10 a token, and then that is visible to all the investors, and a new investor. So let's say a retail investor can come in and buy a portion of what is offered for sale. Atomic swap smart contract, wallet to wallet, pretty much instantaneous settlement. Of course, once the transaction is initiated, there's an integration with Texture Capital, which is the ATS. And so they do all of the compliance work that's automated on their back end, and to make sure that we're SEC compliant. Once the transaction is effectuated, the cap table is up to date, even on the initial tokenization platform. So on the cap table management tool, the data is coming from the blockchain, so it would be in sync pretty much instantaneously. So yeah, that's just a short overview. Don't want to take any more time, and feel free to ask questions in the Q&A section. Thank you.
That was fantastic. That was absolutely awesome. I know this has been a project working in the makes for a long time here. Great partners involved like Texture Capital. Love the Privado, previously the Polygon ID.
Yeah,
partnership.
Privado. That's it.
It's great technology. That's the future, right? Having that on-chain KYC and access instantly. It's a beautiful thing to see part of the Rex platform, which I also think is a great name. To be able to say. So I'm looking forward to it. I'm excited for it. And congratulations. Everyone, definitely, as a reminder, you can ask questions throughout this webinar, and we can try to answer them on the side, in the chat, or here in the webinar. So like Gabriel said, if you got some questions about Rex, fire away in the meantime. But now you are stuck with me, I believe, for a little update on what's happening more in a macro sense in the United States. So I'm going to just jump right into it with a little presentation of my own. I think we got about 15 minutes here. There's a lot going on, and it's a lot that's also happening globally, but specifically here in the United States. I consider this one of the biggest movers in the space. And just as a little context for why I'm here able to talk about this topic is I'm the founder and CEO of Secure Token Market, STM.co, if you want to check it out. But since 2018, we've been in the industry tracking all the different platforms that are powering tokenization offerings and secondary markets. So we track that activity on the different listed products. There are tens of billions of dollars worth of tokenizations out there across pretty much every asset class at this point. So it's exciting to see. Of course, there are some big movers here in the United States, and DigiShares actually powers quite a few. And thanks again for organizing this. So let's just kind of dive right in. First, I want to kind of clarify with everybody that the technology in terms of where we are today is we are in full-on commercialization. I mentioned I've been in the space for 6+ years, and in the beginning, just like Gabriel and Klaus know, especially, but everybody else on this call too probably, is that the reality is that it was too early when it first came out. Infrastructure needed to be built, licenses needed to catch up. There wasn't a healthy market and even list of service offerings available. It was all kind of being built in the classic startup way, on the go. But now we are officially to the point where, there are technology solutions from some of the biggest banks in the world to, of course, startups that have now raised tens of millions of dollars, if not more in some cases, for their own platforms and marketplaces and technologies. So, make no mistake about it. The market is alive and well and cooking, and there's lots of projects happening right now. And that's the kind of second point. There are a lot of hurdles and questions around, the regulation, and it's certainly not perfect. We haven't gotten anything in the form of clarity that everyone is seeking here in the United States. But the important thing to recognize is that it is legal. Tokenization of real world assets and securities and the like is completely allowed. We even see the point where, large publicly registered funds and securities are registered, right, with the SEC and approved to leverage this technology. As well as, of course, many private offerings, et cetera. It's not perfect, but it is possible, and we hope to see it become better. But it's important to recognize that, and that's why these markets are forming. It's the launches of the Rexes of the world. It's these marketplaces that have been trying to build their chicken and the egg of listing great quality assets that investors want to eventually find and participate in. So they got to do both and build out those markets. And that's coming together now, which is extremely exciting. It's really one of the best times to be getting into this technology. It's still sort of the early mover days, but it's certainly to a point where we now have, a real market that's formed. And I think one of the biggest ways to validate that is the first trend I want to cover, which is the institutional adoption. This isn't, the world of 1, 5, 10, $50 million offerings for startups and new fund managers and new projects. This is now something that Wall Street is saying, hey, we've actually been studying this stuff for a long time. And by the way, here are now full-on product offerings and platforms that they're getting into the space with. So this is a really big deal. They're kind of basically, most of them, I won't speak for all of them, but most of them are taking the approach of, we're going to leave our legacy system alone. We're going to, in parallel, build a digital asset unit that likely builds some kind of platform to engage the market with and start to take advantage of all of the different benefits of tokenization beyond liquidity, as well as, of course, the transparency and the back office automation and a lot of other benefits that big banks and asset managers are looking at. Just in the last year, basically a lot of these projects went live, but some of them have been in the works for a little bit longer. We know JP Morgan, their Onyx division has been at it for quite some time. For those of you who don't know, they have a lot of different divisions. They have a a division for repo markets that does in the trillions now in terms of powering transactions. They have now a digital debt service where they powered a municipal bond up in Massachusetts. And they do a lot of other great things. Their tokenized collateralization network, et cetera. So, they're a big mover, but we know BlackRock launched their big fund earlier this year, BIDL, which we'll get into. Franklin Templeton launched their money market fund. Benji back in 2021, I think it was. Citi has now launched their digital asset platform or digital asset services division. It's one of the two because Goldman Sachs is the other one that now also has a commercial platform called Digital Asset. There's GS DApp Digital Asset Platform. So Citi's is the DAS. And State Street just recently announced, and they've been talking about it for quite some time, hired many people for this segment. And now they've announced that they're working with a company out of Switzerland called Taurus to launch their division around all this. So this is a really big deal. This is, means that everybody is paying attention to this. And this is not just sort of a crypto schism that's popping out, that this is something that's transforming finance as a whole. And now it's, being looked at by the biggest players in the world. That's really exciting. And the next big trend that we're seeing is this concept of replacing cash. Right now, stable coins have been a super phenomenal use case, an adoption of real world assets, if you will, with the US dollar mostly, coming out and saying, hey, we want cash products or as a utility, as a tool to use within crypto and other use cases as well, cross-border transactions and other things. So Circle and Tether and others, have been leading the way in that. And we've got some other big trends that are now coming after stable coins. In fact, in the traditional world, there's way more treasury products and money market funds essentially out there than there is cash. I think it's like 2 to 1 maybe, but don't quote me on that. And now we're going to expect a similar thing, right? Because why would you ever want just regular cash when you can have your cash earn money? And if you interact with, brokerages on public markets, you're used to dealing with money market funds that automatically do this for you. And with treasury rates still, pretty high, and especially where they were until the recent cut, it's been a really popular use case for tokenization for a number of different reasons. The biggest obviously being that trade factor. Again, why are we settling in cash when I can settle into a treasury product, or what I call a liquidity product? Anything that's a money market fund, anything that's a US Treasury based product. There are even private funds that are a mix of different CDs and other things and repos that they bring into play, like BlackRock's. So these liquidity products are a very useful tool to settle into, so that I'm always making money as a trader, as a manager. Which leads to the second point, treasury management, right? Like, why are you keeping all of your cash in a bank account when you could have it making money very, very easily? It's liquid. A lot of these products are instantly redeemable into stable coins or other methods. So these are really popular use cases. But beyond that, people are using these products to post for margin, for collateral, for borrowing capabilities, essentially to extend their credit and use as collateral. So that's a powerful use case, I think, that's going to grow. And then DeFi is endorsing this and embracing it, saying, hey, we want to take advantage of this US dollar yield in our different, innovations that are happening in the DeFi space. So we're seeing a lot of these products get embraced, like Ondo with over 600 million in assets under management for their 2 products, or TVL as they like to say in the crypto space. That's a monstrous amount. BlackRock, over 500 million in their one single product with Securitize, the BIDL fund. It's backing Ondo's product as well, one of Ondo's products. And then Franklin Templeton with their own, they've been out in the game short behind. Between them right there, you have essentially 2/3 of the market. But you do have another dozen or so providers beyond that are also going after the space. And I expect that to continue to grow, especially when it comes to large asset managers and banks that do a lot of these services in the traditional market. They're going to pay attention to what's going on here. So you're going to see this market continue to grow. We'll talk about that as a topic later. But finally, last but not least, we're going to talk about real estate, right? Especially with the launch of Rex as another example. You know, that we're going to need a venue to trade real estate because it's a hot thing. You know, Realty has been really good over the last several years. They're a U.S. company that tokenizes a lot of U.S. real estate, though now they've gone beyond the U.S., tokenizing some stuff in Panama and Colombia and such. But they've tokenized well over 100, I think it's like 110 or 120 million in real estate across hundreds of different properties and projects. Investors on average putting in 100 to like $1,000. You know, these are small tickets. I think they have like 20,000 investors, tens of millions in rental payments through their ecosystem to date. Like they are a very cool use case of tokenization is happening. Red Swan is another great example. They're on track. You know, they have some signage and pipeline to do billions of dollars in tokenizations for their platform. And another example with a fund that was recently announced by Steelwave Digital for $500 million. It's the digital asset arm of a multi-billion-dollar CRE firm. So you can see this market is going to start to become popular. And the US being such a great market and a capital market specifically, I believe that's why tokenization will succeed here in real estate, specifically in the US. But we know globally it's a trend as well. So just to end up and wrap up here, we do have some regulatory hurdles that we've been dealing with. Of course, it's not perfect out here, specifically SAB 121, and you know the crypto atmosphere is again this lack of clarity is definitely holding back a lot of firms from making decisions or endorsing these products or you know going full on in you know requiring kind of what is required to be in this space. So that's been a problem. We have the special purpose broker dealer for RWAs in the United States that essentially allows custody on behalf of clients for securities. Right now, most of these ATSs, you have to do, you know, self-custody, which is one of the benefits, right? We all want to own our token, but in some cases, especially for those who don't, you know, you're going to need that license. And they've only awarded out two, T0 being the most recent one. So there's definitely that kind of hurdle, and we're all looking towards Congress, you know, to potentially pass some kind of legislation that will force the SEC's hands, as well as all the other regulators that are involved with the different tokenization of different use cases. So, you know, we're looking for some kind of clarity, like we see with at least MiCA for crypto in Europe, and we see sort of regulators in other jurisdictions outside of the US that are certainly much more supportive and engaging when it comes to RWA activity. So we'd love to see that kind of change, but that's all I got for you. You know, I'd love to stay connected with everybody as after this webinar. We are very active on social media, Twitter, LinkedIn, and on YouTube. We got a ton of great content as well. And we just recently released a report on the whole industry featuring hundreds of firms from around the world doing all these different things. So definitely go check that out. We also do the consulting if you're looking for that kind of work as well. So thank you so much for your time here. And meanwhile, I'm going to go back to the Zoom here. Next up, and again, feel free to ask questions, folks. Happy to answer them on the side, or the team will answer them on the side. But we did get a chance here to give some time for Gary to join us, and we're excited to hear from him. He's an experienced attorney in this space. He's the founding attorney of Alamore Law Group, and he's also, by the way, an Air Force veteran. So thank you for your service, Gary. And you've got 20 years of diversified professional experience, according to your bio here, both technical and legal. So, you know, you've definitely got a lot of cool things to say, specifically about blockchain with your unique insight with your intersection with law. So, I'd love to kind of just hand it over. You're welcome to pass on any other cool tidbits about yourself, but looking forward to your presentation.
Thanks, I really appreciate you. Excellent presentation. Yeah, as he said, my name is Gary Rommel. I'm with Alamore Law Group. My specialty is doing startups and sort of anything blockchain. Prior to this, as he mentioned, I was in the Air Force. I used to fly on AWACS aircraft. I was actually looking at this kind of cryptography, you know, all of those years ago. 9/11, I was actually a first responder to the Pentagon via airplane. And then we ran the wars from the air. So this is kind of a good change. Now I just battle paperwork. I don't have to worry about bombing anybody. So let's see. I've got a presentation here I can share. Where's the screen share? There we go. Dun, dun, dun. Share screen. Boom. Okay. Desktop. Okay. Can you guys see it?
We got you.
You got me? Okay. Excellent. All right. So of course we're just kind of getting into the legal aspect. It's thick. So there's a lot of slides and I may move fast. But if anybody wants the slideshow, feel free to just email me. My email's right there, Gary@alamarlaw.com, and I can send you the slideshow and you can sort of, eyeball the details then. All right, so we're talking about the tokenization of real estate, the legal process, but really we're talking about the tokenization of everything, because the legal process for real estate is going to be the legal process for any company. If it's a startup company making widgets or electric vertical takeoff and landing aircraft or whatever it is, we can tokenize it, right? So here's the process. From the perspective of real estate, step one is usually we're talking about a managing entity, be it a corporation, a DAO, an LLC, and then we're going to form an SPV to hold that real estate. And usually we're talking different jurisdictions. What jurisdictions is good for tokenization? Delaware, Wyoming, Tennessee, Utah. There's various options that we can discuss when we're at that point. Step three is execute the security token offering. What are we doing? We're selling stock and we're selling it via a security token that's tracked on a distributed encrypted ledger system. That includes the same thing we're going to do for any kind of offering, which is the legal paperwork, any financial statements. And of course, with tokenization, we've got the extra step of a platform setup, and something like DigiShares is very easy to set up and go. Then of course, we talk liquidity with secondary trading exemptions. Keep in mind, the SEC chicken eye is upon you with this stuff. They're going to be taking a close look at anything that's plugged into sort of a crypto platform or that's accepting an alternate currency, because they worry about other things. They worry about money laundering, and they worry about different items. So we're always going to be worried about doing the right paperwork, but that's the thing. We're not going to argue about this. Is this a security? We have what's called the Howey test, right? Is there investment of money in a common enterprise or scheme with the expectation of profits from the efforts of others? Well, if we're talking about a real estate syndication, obviously it's a security, especially if we're talking about a corporation, stock, or membership in an LLC. That's a textbook security. Keep in mind, a safe is also a security. A convertible note is also a security. And a lot of founders, they think, oh, well, we can do some really quick paperwork and we can kick out a safe. And you're essentially sort of kicking a can down a road. You're still doing a security, so we still need to do the forms and disclosures with SEC, but you're not quite giving them a full-on equity round. So I like to sort of skip equity rounds, but that's a whole other issue. Like I said, a convertible note is a security. Now, are you selling an entire house to one party? Is that a security? Well, maybe not, right? There's platforms like Proppy out there where you can buy and sell an entire property with a token, and it may not be a security. But again, we're dancing a fine line, and the answer to that will be it depends. So it's a security. Now what? Right? Now what do we do? Well, we either register the security, do a full IPO, or we sell under an exemption from registration. Anything else is unlawful, right? A full IPO is expensive. Mainstream stock exchanges, et cetera, exemptions from registration that we use, and a lot of people are used to talking about: Regulation D, Regulation S, Regulation CF, and Regulation A, or A+. A+ refers to a tier 2 in Regulation A. Advantages of unregistered offerings: it's less of a pain than a full offering. And of course, you can read that there, but I'll skip it. So sometimes you might want to do a registered offering at the end of the day, but we'll talk about Regulation D. Most startups and most real estate syndications start with a Reg D. Now, when we talk about Reg D, we're talking about Rule 506B or 506C, for example. Rule 506B doesn't allow for the same kind of advertisement that 506C does, but with 506C, we need to verify that the person is an accredited investor. And so we talk about this. There's Rule 504, less used. Here's 506C. So this is the kicker in bold. Permits issues to communicate with investors through general advertising and solicitation, so long as reasonable steps to verify they're a accredited investor. This is great because you can take your offering and you can put it on LinkedIn, you can put it on Facebook, you can put a landing page on your website, and you can hit the button and you can onboard an investor straight through like a DigiShares platform. And now you've gone through all your regulatory hurdles. They can upload an accredited investor status, and everything can be verified before that security token is transferred, which is very important. So we're controlling that security in a better way. 506D, there's bad actor disqualification. We can't have any bad actors in the bunch. You can't be a director or an officer, own more than 20%, and be disqualified. Offshore transactions, when we talk about Regulation S, we're really talking about Rule 903 and 904. This allows a U.S. entity to sell securities under this exemption to people offshore, to somebody not in the United States. Our SEC doesn't much care about protecting someone in another jurisdiction. The big caveat to this is that you need to really have cover in the jurisdiction you're selling. So if I'm selling in Germany, I need to be selling lawfully in Germany. So we need to interface with whatever council and whatever jurisdiction that you're selling your Regulation S in. The conditions, offshore transaction, and there can't be any directed selling efforts. And that's a big one. And directing selling efforts can even be just having a web page that a US person can go to. So blocking the IP address for those offerings is definitely advisable for Regulation S. And with Regulation S, we can do that simultaneously now with the rules of integration. They've changed over the years. So I can do Regulation D offering to accredited US investors under 506C, and I can simultaneously do a Regulation S offering to overseas investors. Now, what's Regulation CF, or crowdfunding? Regulation crowdfunding allows you to raise up to $5 million a year. Now note, Regulation D that we talked about in Regulation S has no limit on the monetary value. It's an unlimited raise. Regulation CF, however, lets us get to non-accredited investors, retail investors, but you have to go through a registered CF platform to do so. You can't just create your own. I mean, you can create your own and you can register it as a CF platform, and you don't even have to be a broker dealer to register it, which is a new feature, but you still have to register it. So that's sort of being the excluded middle is Regulation CF, because a lot of people, they go from the unlimited Reg D and S to the Regulation A, where they can utilize their own technology. A good Regulation CF platform I like to go with is Republic. There's other ones, but I can interface with them or any of them and do the paperwork that's necessary for any offering. Regulation A, they call that kind of the mini IPO. With the Regulation A, you can raise, with Tier 2, you can raise up to $75 million a year, and this can be from retail investors. So this is a public offering. You can advertise this, and again, you can even put this on your website. You can advertise, hey, I'm a startup, I'm doing an offering. Click the button and invest now, and then they're on the blockchain, they're onboarded. And everything's taken care of. With Regulation A, we do, however, have to wait for SEC. With Regulation D and S, we don't. We just file and we go. And then, of course, there's continued reporting requirements with Regulation A that aren't otherwise there. So this is not always the first step. Regulation A, we can make it a little more affordable than doing an IPO. If we start with, say, a Regulation D, my flat fees for Regulation D and S are $15,000, and that's with an AI kicker. Thanks to AI, I am able to cut down my fees on some of the bulk paperwork with the client's authorization. And then a Regulation A, for example, is $65,000 minus 15 if you've done a Reg D. So it's fairly affordable compared to trying to do a full IPO. And you're actually doing an equity round, an equity offering, and you're putting people on the blockchain. So that's a really good option for any startup, even if they're not doing real estate syndication. So liability for non-compliance with an exemption. At the end of the day, you've got civil and potentially criminal liability. If you don't do paperwork that you're supposed to, you have liability. And if somebody invests in your offering and not everything is done correctly, they might be able to get all of their money back at any point in time. And so it's very important that all of the disclosures are made. There's no material misstatements or omissions, and that we're telling everybody everything and we're doing everything correct. So there's no liability for non-compliance with an exemption, or there's no failure to meet one of those exemptions. Right. So then we have secondary transactions. When we talk about resale, we talked about Rex earlier with Texture Capital. I'm really glad that's coming to fruition. One of the first things when I started looking at these platforms, I was going to actually build my own because I'm a tech person. And then I found platforms like DigiShares, and it's like, well, I'll just be the lawyer and not have to build my own technology behind it. But they're plugging into a secondary trading ATS. That's really the only way to do it for secondary trading. It's either a FINRA registered ATS, you're going public, or it's trouble. Because as an issuer, you really can't be involved in the secondary sales. You can't make money off of the secondary sales. And you have to be careful not to be an unlicensed exchange. And when we're selling these tokens in like a primary issuance, which is, Reg D, Reg S, we have to be careful that we're not acting as an unlicensed broker dealer, that we're meeting those exemptions properly. And that's where legal counsel can help kind of guide you through the process to make sure you're not blowing exemptions like 3841. There's resale options like we're talking about in the secondary sales, and rules that allow that to happen. Rule 144, you might hear, is one of those safe harbors. Rule 144A to institutional buyers. There's holding periods for resale. So if you're talking a regulation D, it's a controlled, it's a restricted security, and you're going to have a 12-month holding period on it before you can sell it to a non-accredited investor, unless you're going with something with 4A7, and then you can resell it to an accredited investor after a period of time if certain conditions are met, right? So we have all these different resale rules that you can get into. Rule 144, 144A, section 4.1.5, which really was codified by 4A7. And then we talk about some other kind of trip mines that happen with these companies, like the Investment Company Act. Now, if we're dealing with real estate, we can look at the 3C5 exemption, which covers real estate. If you're not dealing with real estate, 3C1, you can have up to 100 investors in a fund before you become an inadvertent investment company and trip that wire and get into big trouble and lose all your money if you don't do registration. So we just really have to be aware of this stuff. There's what's called the balance sheet test. If you are a company and you own stock of another company and there's a certain percentage of it on your balance sheet that makes up your assets, you're an investment company. So we just have to be aware of those landmines. And this is, stuff from the CTFC. OFAC, other things to watch. You can't take sanctioned individuals, right? You have to run people by the specially designated nationals list, the SDN list, and ensure that you're not dealing with, say, somebody in Russia, right? Or even the Crimean Peninsula that's been taken over, or you're not dealing with Chinese military industrial complex sanctions. And so that's another thing to watch, because just one bad apple in the bunch, for example, one person under those Chinese military industrial complex sanctions can tank the entire company. So those things have to be checked very thoroughly. There's civil and criminal liability. And again, this is you don't have to be purposeful about this. You can just, it doesn't have to be, it can be a strict liability crime in a sense, meaning you don't know, you didn't know you were committing a crime and you did. So you've got to be really careful about when you start a company and you onboard investors, who are those people? Where are those people? And are they sort of on any bad list, right? So I guess that's sort of the end of the presentation. Like I said, if anybody wants a copy of it, here's my email, Gary@Alamer.Law, and there's my cell phone number if anybody wants to just give me a call. Any questions?
Yeah. Doesn't look like we got anything coming in, but thank you for that, Gary.
Actually, Hervik, sorry to interrupt. I think
Yeah, go.
we should put the question to him that was asked by Andy here. It's a great legal question. So would the USA allow for a secondary exchange to exist within a members-only mutual ownership closed loop investment protocol outside of registering with the SEC?
Negative. Don't do it. Don't do it. If you're not a licensed exchange, a licensed ATS, you don't want anybody trading their securities on your platform, or you're going to be an unlicensed exchange, you're going to be an unlicensed broker dealer, and you're going to go directly to jail. Well, at least you'll probably lose all your money. You might not go to jail, but it's possible.
Don't want to speak over the lawyer because I am not a lawyer, but there are bulletin boards you can check out. It's an old method of keeping very closed loop members only trading that's not facilitated by the issuer. But maybe worth something to check out. But don't want to speak for it.
Yeah. Be careful. There are bulletin boards where people sort of hide behind, and they do 506B or 506C sort of primary issuance offerings. But when you start swapping and trading, then you can get into a lot of trouble that way. And we have to make sure, like I said, there's issuer exemptions for those boards, and you've got to be very careful.
Yeah, don't expect any crypto startups to suddenly just enable offerings for swapping. That's where they get in trouble. That's where we've seen Coinbase, Kraken, and pretty much every Gemini and pretty much every other major US crypto market get hit by the SEC, for anyone who isn't aware of that.
Yeah, that's how they go down fast.
There's another question from Lara. What about the Advisors Act? Don't you need an exemption to that as well?
If you're trying to act as an investment advisor. If you're selling your own securities, if I'm the issuer doing a real estate syndication, selling my own securities, then I'm not acting as an investment advisor. But if I try to sell somebody else's securities on my website, now I'm acting as an unlawful investment advisor, and I'm running afoul of the rules.
I think that's it, right? So I think you can, if you want, you can type your answers to the remaining questions in the Q&A, and I'll give back the word to Hervik. Sorry for interrupting.
No, that was great, Klaus. You caught some last minute questions, and yeah, it looks like, Gary, if you go to the Q&A, you got a couple more questions that you can answer directly there. But in the meantime, we're gonna keep it going. Thank you again for that legal overview. That's definitely one of the best ones that I've heard. Really concise in terms of just everything you need to know, folks. I think you'll be in good hands with Gary and his firm here. Moving on, we actually have Harsh from TOFI24. Got over 20 years of banking experience, as well as you've consulted and supported Fortune 500 companies. According to bio here, your approach focuses on combining domain expertise with a consultative leadership style, allowing you to transform ambitious goals into actionable strategies. So with that, why don't you take it away? Let us know anything else that we should know about you, and looking forward to your presentation. And you're on mute, by the way. There you go.
Yes, I hope you can hear me now. Okay, super. So indeed, thanks for this wonderful introduction. I'm fairly happy to be here and listening to all the trends and discussions around opportunities in North America. And of course, thanks to Klaus for looping me in this. He and DigiShares have been a great mentor partner in our journey. In terms of my intro, I'm a banking professional who has a startup success also under my belt. So I've spent close to around 20 years growing startups, scale-ups, Fortune 500 firms across Asia and Europe. And my expertise, as you highlighted, lies in new business models, how to construct them, how to put a platform approach towards them, and thereby how do we take it to a profitability scenario. Now, what I'm here to discuss is about TOFI. So along with my co-founder, Roland Mulder, who couldn't be here, but he'll be very happy to hear that Harvik, you are a Belgian, so that would be interesting for him to chat about. But yeah, together with him, we are here and we want to imagine a financial infra solution for this tokenization ecosystem. So we have worked on it for some time, and now we have gathered enough traction and proofs, etc., to build this. We have a skill team, and here I want to share my presentation to take you through it. Right? 1 second. I hope you are able to see my screen now.
We can
Yeah.
see it. Go for it.
Super. So yeah, so I'm here to talk about TOFI 24. In the ecosystem that we have observed around tokenization, that we saw clear pain points, most of which has been highlighted in terms of regulatory, secondary exchanges, etc. What we are here to solve is how to transition between the infrastructure which is available on centralized finance towards infrastructure opportunities which are there on the decentralized finance. And although we all know that DeFi is the holy grail, we believe that we have some bridges to cross before that becomes as meticulous as it is on the centralized finance side. So what we are here do is with this bunch of team, myself, my co-founder Roland Builder, we bring in expertise Asia and Europe on centralized finances and insurances. And we have a bunch of very talented team members as well as a great advisory team who are leading us in our thought process and strategy. I don't need to explain this slide to you. I think everyone here knows about this whole opportunity area and what needs to be done around it. What we are here to say is that we are focusing our attention. So our clients are the distributors of tokens. So it's a B2B concept, and we are focusing on solving the pains of token issuers and any other aggregator intermediary who's trying to join us in the journey. So, and the pain points that we see over here, just to briefly glance through it, they have a pain point in customer acquisition, in establishing trust with customers, conversion once the customer comes on their pipeline, then how do you convert them, and the cost of funds. Now, what we are here to do is in this traditional journey, as you see, this is the existing token sales journey on any typical platform. You do a lot of good work in bringing a real estate asset or tokens to the market. You list it on the site. Here we have taken an example of 100 euros minimum token size. These tokens go through a direct purchase journey. It's a long sales cycle, as has been in our experience of talking with a lot of CEOs for their projects. After the direct purchase, custody changes, and then in the long-term management of the asset, there's a distribution of profit. We are here to solve the long sales cycle problem. And how we do that is that we work along with token issuers so that they can offer to their customers, the retail customers or accredited customers, a empowered buy now, pay later kind of similar scheme, which we call as reserve now, pay later. The idea simply is that the person who comes to their site takes the first token as they intended to come and take it, but in essence, committing to buying 4 more tokens. When they do that, then we follow them in their journey by method of exchanges of information via, let's say, platform of the token issuers or the tech intermediaries. And we trace how much of it gets paid. So they would pay, let's say, the first installment, second installment, third installment, and then maybe at some stage, the retail investor says, I don't want to pay. Now, this entire communication is happening between the retail customer and token issuers, but we are empowering the token issuers in selling those. So in case the 4th and 5th doesn't get sold, we take it in our books and we give them the check. So in essence, we are helping them secure 5 token issuance instead of the 1 token issuance that they had traditionally been obtaining from their targeted customer base. So this, in essence, is a very simple illustration of what we are doing. Again, in terms of simplifying this to the retail investors, the green tokens are the one which is transferred to them. Black tokens are the ones which are reserved. Gradually, over a period of 4 months, all the tokens get transferred as well as the benefits thereof. Now, in terms of traction, we have had our team set up. I briefly glanced through it. We have covered elements on fintech, legal, risk, tech, marketing, and insurance between the founder and the immediate team. Entity creations have been done, proof of concept along with law firms, retail clients, 4 token issuers, 2 TPAS providers. And we have signed rollout agreement with some of them. The ones that are shown here are specific to DigiShares ecosystem, not outside for privacy reasons. But we have pipeline of other TPAS providers, issuers, and financial entities. And there's a fairly strong demand pipeline which has been built up. So right now, demand pipeline is not a main problem statement. The problem statement is that we want to build a algorithm behind all these token issuance, an algorithm which in future can determine what is the quality of token, whether it is asset dependent, platform dependent, geography dependent, economics dependent, etc. So we are looking to have a very diversified kind of a asset pool, which helps our algorithm to learn better. So we are asset agnostic, we are tech agnostic, and yeah, we are here to kind of boost sales. By doing this, we believe we are helping these 3 pain points of the customers: trust, conversion, and cost of funds. Because if we speed up their sales, of course the money gets cycled faster, so they benefit from this offering. So that's in a sense what's proposition is about. Yeah, good to mention here that we have been funded, so it's going good on the funding and traction side. And yeah, we look forward to gathering more information and helping out more token issuers in this journey.
Thank you. That was fantastic. Some really great slides in there, comprehensive. Love that ecosystem slide. You're doing some great stuff in the space. I don't see any specific questions looks like that have come in yet, but keep a lookout, just in case you can go out there and answer them. But in the meantime, we're gonna keep it moving. So thank you, Harsh. And now we get to move on to Ashley, my good friend Ashley Sade. We actually met a couple of months ago back in May at Tokenize This. That's a conference we put on every year for the tokenization space. And I'm very glad to see you once again. You were telling me about this project, but it wasn't quite yet live. So I'm excited to hear the first public pitch on what you guys are doing with ReReal. And also, for those of you who don't know, Ashley's a fantastic, incredible business operator. Maybe you can share any kind of experience or anything you'd like us to know about you before we get started. But like I said, looking forward to the presentation.
Awesome. Great introduction, by the way. I have to thank you for that. The first thing I want to do is share some gratitude for DigiShares putting this on, and as well as everyone who is listening in, because we all know you have a choice what to do with your time on a Thursday morning or afternoon or evening, depending where you are in the globe. So thanks for taking a couple minutes and sharing it with us. And as Herwig stated, I am actually going to share my screen, and you will be the first people to see what we are doing here at ReReal. And just give me 1 second. And all right, I think we are good.
We gotcha.
So I want to begin by kind of explaining to everyone how we got here and the why before I go into the how. So about a year ago, I was contacted by a gentleman who's one of my business partners now, an incredible guy out of Germany, Torsten Vogler, who is the right-hand man, liaison operations guy for a very highly reputable and well-distinguished real estate, let's say magnate or tycoon in Las Vegas. He does all non-gaming properties. And he was trying to solve some of these similar pain points that we've just been talking about, the access to liquidity, the high cost of capital, and how we can do that through blockchain and tokenization. And so I was tasked, along with another incredible guy out of New York, Howard Krieger, who's my business partner on this, with trying to figure out the best way of achieving this. And after 6-7 months of exhaustive research and conversations with maybe some of you who are even listening in today, we came up with a REIT structure, which is a real estate investment trust structure that would be tokenized and would act as a conduit or as a market maker for a secondary exchange which we have been talking about. So this is just sort of a great lineup that has just funneled into what we're doing. I know DigiShares had a webinar yesterday on the alternative trading system. So really great timing to talk about what we're doing and building out. Let's start with our business model in a nutshell, and just to read over this. We are essentially using real estate tokenization to provide the immediate access to liquidity and enabling the investors to choose from investment options with different levels of potential risk and real returns. So obviously, any company wants to lower the risk and heighten the returns. We think with the investment options that we're building out here, that we have a really, really nice product that will make sure that happens for real estate developers and allows them that access to the liquidity in a much faster manner. Okay, this is, I think my slides are not moving forward. So there we go. Okay, some of the market needs, the capital for real estate, as we've spoken about, inefficient onboarding processes. So a lot of companies have very cumbersome onboarding processes. We are intending to tokenize cap tables and using DigiShares, obviously, to do so. And what we will be doing is creating a Web 2 experience while still having the Web 3 sort of crux, the foundation underneath it. A lot of real estate developers we know are not, people who are very, at least educated or at least know a lot about blockchain. And we want to try to keep that potentially out of the conversation and just let them do their thing, but then to add those efficiencies on top of it. We're also looking to unlock the real estate liquidity. So by creating a lending platform and through the REIT, we will achieve this, and I'll go through how we're going to do that in the next couple minutes. And the ability to invest in the real estate market index. So as we've been talking about the alternative trading system, the exchange that we're building out will be dedicated to real estate, and we're certainly talking to DigiShares about achieving that as well. Solution, very straightforward. Right? So complete worry-free tokenization services. DigiShares, this is what they do. They're one of the leaders in that space. That's why we made a concerted effort to contact them and to work with them. Primary and secondary markets with SEC registered ATS. Again, be it DigiShares or be it any of the other ATSs that are out there, as we just heard from the legal presentation, it has to be registered with the SEC. Otherwise, you are going to lose a lot of money and you're probably going to lose your business. Efficient tokenized REIT market maker. So we see the REIT as being the conduit, as I said. So as companies come in and tokenize, before they go in through the exchange, they will come into our REIT. That will allow them to have access to capital through our lending pools and or be able to list after that lockup period, depending which direction we go, but probably Reg D, which would be about a year lockup period, to list on the exchange. And then an open marketplace to already tokenized deals. So being able to bring public eyeballs onto our exchange and be able to purchase either fractions of the real estate project or to purchase the entire lot of it. But the open marketplace is something that needs to happen, and really, really excited that DigiShares is starting to make that happen. And then in the future, the security coin, that's what we're working towards. It's going to be pegged to a real estate performance. So in other words, most of the security coins, as we know, are pegged to dollar or gold or something else. That's a little more volatile than the real estate performance. We feel that by building a really strong portfolio of properties, that we will have much, much higher value and higher appreciation to that coin. So how is that unique? Well, as Klaus pointed out in the beginning, no one has actually done a tokenized private REIT. There are some public REITs, they're not tokenized either. But by making the security liquid, so by doing the market making and being able to trade and borrow against these investments through our secondary market, through the exchange, we feel that we're bringing a lot of advantages that are not there for current real estate developers. We ourselves are real estate developers, or at least Philippe Ziad, who is our owner and founding member out of Las Vegas. And we know that there's a couple other projects out there that are also being run by I think Steelwave, by some really good and very successful real estate firms. But we feel that we're also in that group. One-stop shop for tokenization solutions. So as we spoke about creating that SPV and the tokenizing of those securities through DigiShares, and also creating a comprehensive offering to a real estate developer, which takes everything into account. So you just have to pay one price, or we can even finance that for you. And it takes into account everything from start to finish, tokenization, legal process, so forth and so on. The aid in raising the capital for the development projects. That's really, really important, especially for a lot of these real estate developers. So we can help through our network in raising that capital and also deploy some of the cash that we will have coming into the REIT for those development projects that are within our ecosystem. And then, of course, that dedicated real estate marketplace that we have spoken about, I think, tirelessly at this point. Who are our customers? Our customers are, we see three different buckets. So investors, people who want to invest into the REIT, family offices, asset managers, institutions, sovereign funds, estate attorneys, so forth and so on. Capital seekers, people who are looking to get capital. The price of getting that capital today, even with a small decrease of the interest rates yesterday, is still pretty high, especially for real estate developers and for commercial projects. So individuals, property LLCs, entities owning real estate that want to increase their own liquidity. So they just want to get liquidity, but without giving away ownership. And then builders who might be looking for that additional money that we can provide to them through our lending pool. And then the last bucket, there's going to be the contributors. So we ourselves are contributors. So we contribute some of our own, the real estate that Philippe has into the fund, but other contributors that might be in the residential space or hospitality space. And then also the asset managers. So people who can actually contribute some of their own assets into our REIT and into our ecosystem to help with building that liquidity pool and secondary exchange. The total addressable market, I could just kind of run through this, but I think Herwig did an amazing job of talking through a lot of these points. These are just some more figures. The market just in real estate, and obviously this is why Klaus started out by talking specifically about real estate. And a lot of what we've been speaking about throughout this presentation has been tied to real estate. It's because that total addressable market of a $20 trillion valuation with assets, just real estate, tokenized assets at $1.5 trillion by 2030 is massive. And one thing that came out of actually Herwig's conference was that, this is such a big market that we don't need to be in competition with one another. We can all collaborate with one another. And I think that's one of the things that we're looking to do is collaborate with others, build that exchange with perhaps DigiShares, and then open it up to other real estate funds that have tokenized assets and be able to help provide that liquidity for that exchange. So this is a little bit on the ecosystem and how it's viewed. And I want to take 1 second just to pause, because I've been going pretty quickly through our slides just in the interest of time. But I want to make sure that everyone really understands how the things work for REIT. So essentially, once you tokenize your product, you will then be able to move that product into our REIT. Our REIT, if you think about it and just kind of look at it from a capital markets perspective, The exchange is like a NASDAQ, and the REIT is like an ETF. So just think of an exchange traded fund, and the REIT is like that, and the exchange is like a NASDAQ. And within the REIT, you have many different property developers and projects. And just like within an ETF, you have many different companies. Those companies that are in that ETF are also listed on the NASDAQ. Just like with us, the properties and the projects that are going to be into the REIT are then going to be listed onto our onto our exchange. So essentially, if you think of it that way, an ETF puts money into those companies. Our REIT will put money, or will help provide liquidity for some of these real estate developers. It could be in the form of development that they're looking to get involved in. It could be in the form of just helping them get to market. And then through that, the REIT also is raising its own money. And so from the money that the REIT itself is raising, we then have a lending pool that we can draw from. And then we can also push money into the exchange if need be. So I hope that really makes sense for everyone. I know I raced through it, but that in general is how we're looking at our project. And we really think that there's a huge opportunity here, both based on timing, where we are today in the marketplace, as well as what we have available to us in the form of the resources, both from our own resources, as well as the resources that are available outside, such as DigiShares and what they're offering today in all the different areas of tokenization. And the last thing I'll do is share our team. We are lean and mean, although we're really lean and nice. Philippe is our visionary founder and the real estate developer out in Las Vegas. The aforementioned Torsten and Howard are also shown there. And then there's me, and I'm kind of the farthest away from the camera, but today you see me very much up close. So with all that being said, I will turn it back over to the great Herwig Koenigs, and thank you all for your time and your attention.
Thank you, Ashley. That was fantastic. Love the analogy to sort of the NASDAQ ETF comparison, building a beautiful ecosystem. Can't wait to see it all come together. Also love the branding. You guys did a great job. That's real, everybody. I don't see any specific questions that came in for you yet. There's just one question, just contact email. What's the best way to get in touch with you? Maybe you can answer it too on Q&A as well. You can say it now, but answer it there too, so everybody can see it.
That's right. So it's my first name, Ashley.Saudet, last name @reitreal.com. And as Herwig asked, I will drop that into the Q&A right now. If anyone has specific questions, I just want to be judicious with everyone's time. So please feel free to reach out to me.
No, that was great. I can't wait to circle back to the panel later. But for now, we are going to move on to another wonderful local Miami individual, as well as someone who I got to meet at the Tokenize This conference. Sharon, how are you doing today? I'm excited to also, for the first time, I think you mentioned you were kind of still in the sort of stealthy mode, but now you get to tell us about DigiX, as well as your bio. It's worth mentioning you have a prolific career, very impressive, and a focus on, of course, empowering and supporting female entrepreneurs and led initiatives. So anything you want to share beyond on that, definitely please let us know. And then, of course, you're working with DigiX on Phil Falcone, another legendary entrepreneur, successful fund manager. But he unfortunately had to go and catch a flight, so it's just going to be you, it looks like. But that's certainly not a bad thing at all. Sharon, take it away.
Hi, everybody. I have my contact information here, but the image is kind of not working with Zoom for some reason. So I'll put in the contact info for myself, for Phil, for our website after. Thankfully, I mean, all the speakers before me kind of did most of the work in terms of going into tokenization, the flow of things, the legal. So thanks for that. Also, I know we're kind of pressed on time. So I'll give you guys just a brief summary about what we're working on. We are mainly targeting the retail investor space. That is our target audience. I believe in creating systems and platforms that can be user-friendly and that can merge the two worlds, right? I guess however people want to call it, Web 2, Web 3, blockchain, non-blockchain, and making it as seamless as possible. And also making the lifespan of an investment for an investor as long as possible, right? And for them to be able to have it be as profitable as possible. So that is our number one goal, and that's why we decided to first and foremost target the retail space. We are not strictly focused on real estate. I know that many projects are, and of course, and obviously it makes sense. When I started in the space, I started in the real estate space as well. I think it makes a lot of sense for many individuals who don't come from this space. It's something that's tangible. So, you know, I can understand that. And it's not to say that we don't have some partners that they will be listed on our platform that do have real estate. But we are also focusing on pre-IPO startups that are looking to raise capital. And we are both doing US and non-US, mainly Europe. So we are focusing on US-based companies, but targeting retail investors in Europe. And then also simultaneously with Phil, my partner's background, we're focusing on a very specific space, which is hedge funds, with his background, of course, and being able to tokenize the LP rights within those hedge funds. I think that that's a very specific niche and something that we've discussed a lot, and I think that not a lot of people have targeted. And in that sense, yes, maybe it might be more accredited investors, but we would also like to open that up for some retail. And we focus mainly on the crowdfunding regulation, again, based off of our target audience. I think that we do want to be able to see as many projects as possible be able to flourish and on board without going through such a crazy, insane, expensive process. We really want to see how it's traded first, how many users will be drawn to the project, the feedback that we get, as opposed to just saying, okay, well, we want to raise 100 million right now. So for us, that's kind of what we're really, really focusing on, how we're marketing these projects, how we're onboarding them. We have a ton of advisors, both legal and financial, to help all of our clients structure things in a way that we feel is more attractive and more beneficial. We've also been working on integrating a ton of different third-party providers to have seamless on-ramp and off-ramp so that we can provide various different methods of being able to pay, whether they want to pay in crypto or whether they want to pay in fiat. We also have integrated wallet as a service. So like I said, making it seamless where you do not have to come with any blockchain experience or previous wallet. We're working on also the off-ramp, right? So let's say, how would you get paid your profits, right? So how you want that, if you do want that in crypto, or maybe you want to be issued a debit card, right, where you get your dividends paid out onto. So that's something that we've seen that's been very successful, for example, even if for the real estate, right? So let's say you have profits from the lease of a property, right, and you want that to get paid out. I pull out my Digix card, right? I can go into Starbucks, wherever. So that's kind of our thought process and how we're looking at going to market. So yeah, that's kind of the spiel and what I wanted to get across in terms of what we're doing with our project, because I think everybody else here has covered legal and regulations and structures and technology. So yeah, so I think that's what I mainly wanted to cover from our aspect.
Well, that's amazing. That's an extremely comprehensive and ambitious, ecosystem really that you're developing. Everything from being able to do payments to trading all kinds of different products. Absolutely love it. Do you have any kind of timeline or indication about when, we might be able to start to access this?
I mean, technically we could access it right now, right? I'm just a perfectionist, and I think that a lot of our marketing has to do with the technical capabilities as well. So we still have a few integrations to kind of finish tweaking. I want to say 3 months. But we are already accepting clients to start the onboarding process, which that takes time as well. So if anybody here is, looking for consulting or interested in kind of exploring their options, happy to connect. We actually also have another partner of DigiShares that they, have their own thing, but they wanted to utilize our marketing. So they've been working with us as well, and they are in the real estate space as well. So like I said, it's not that we don't have any real estate, but it's not our only focus per se. We kept it a little bit more open.
No, it makes sense to focus on hedge funds, obviously, with Phil being involved, as well as just being a more open category. This is a trend that is, especially in the US, but globally, it's tokenizing every asset and security out there. So it makes a lot of sense. And, 3 months or, Q1 of next year, this next coming quarter, that's, I would call that imminent. That's very exciting. Focus on getting the details right and getting the right issuers on board, because we all know that's super important too. So glad to hear the focus there. But we are then going to move on. Before we get to the panel, we got the best for last, if you will. Thomas Meyer, you've got an incredible career to speak to, over 31 years in investments. Definitely would love to hear your take on how you're tapping into this technology and how you're exploring this space. So go ahead, Thomas. Let us know about anything else we should know about, and take it away.
This is just absolutely fantastic that I'm following Sharon, because everything that I'm about to talk about, my background is retail investor. I'm a big believer in democratization. I want the average person to be able to have access to institutional types of investment management. So I'm going to show you a couple of projects that I would like to be working on. These are strictly ideas right now, but hopefully with everyone's help, we're going to be able to make this happen. So my background, I just opened my own registered investment advisory this year after 31 years in the financial services industry. I write a weekly trend following newsletter called Algo Trend Traders. I focus on trend following as well as risk mitigation. My tokenization efforts are going to focus on smaller projects for individuals, families, small corporations. We'll let the BlackRocks and JP Morgans have the big deals, but there are so many assets available around the world, and I'm a baby boomer. My generation is going to be dying off, and there's going to be a need for to be able to bring these assets into 2024 and beyond. So we got the compliance people here. Investing in any market is risky and is not appropriate for everyone. There are no guarantees, and you can lose some or all of your money. Nothing in this presentation is investment or financial advice. So there are two items that I've started working on. The first one is a Bitcoin investment fund. And the idea is to trade Bitcoin both long and short, according to proprietary trend following algorithmic signals that I have. It's very simple. You go long when the trend is bullish, you go short when the trend is bearish, and you go to cash when the trend is neutral. So here's the key to success. You'll always have a defined exit strategy for the times when the trade moves against you, and you understand the risks before you get into any investment. Here's my charts, and they look a little weird at the beginning. The black line is the weekly close of Bitcoin going back the past 3 years. This yellow channel is the key. It's called the transition zone. And it kind of looks like a creek or looks like a river at some points in time. It gets narrow and then it gets wider. That shows you the actual volatility of the underlying Bitcoin. And then the green line is the results. Buy and hold over the last 3 years is about a 35% gain on Bitcoin, a ton of volatility. If you do long short trading, you'd be at over 100% gain. Here are the rules. When the price closes above the transition zone, you go long. You can see right here, we have this beautiful downtrend in 2022, very profitable. When the price is above the transition zone, like it was in 2023 and earlier this year, you go long. And when the price is inside the yellow zone, you stay in cash. You can see this green line has periods of time that are flat. Well, that's when we're inside the transition zone and waiting for the next trend to occur. Now, why does this work? It's normal for any investment to trade in a trend. I don't care whether you're looking at the S&P. I don't care whether you're looking at dollar yen. I don't care what it is that you're looking at. It's the nature of securities to trade in a trend. Now, how long does a trend last? Until it doesn't. Nobody knows when a trend is going to end. You all have seen the great YouTube videos of people surfing, and there may be 40 people out there waiting for a wave, and a wave comes along, and most of the waves peter out and don't go on too long. And then there's the wave that's sent from God, and someone is on the wave for 45 seconds or 60 seconds. That's what trend following is like in the investment world. What are the risks of a fund like this? Well, there are a lot of risks. The market is fast. We'll probably not exit exactly at the stop that we have set. We know that governments could limit the availability of Bitcoin to individuals, institutions. Though there would be daily pricing of the tokens, there's no guarantee there'll be a market. And with any investment, there's no guarantee of any return, and it's possible to lose all your money. So what I want to do is, as Sharon was talking about, I want to create through the DigiShares universe a fund that the average person can get into. Maybe a $2 million fund, something small. Tokens maybe sell for $25,000 each. I'd love to make the fund available to non-accredited investors. That might take some time, but that's the goal that I have. And then the fees would have a traditional hedge fund fee structure of a 220 with a high water mark. And then my email address is there, tom@tminvestmentmanagement.com. Now, the second one is, again, something that Sharon's going to love, because this is a patent that is owned by a woman in Houston. And it is called God's Sponge. And it's basalt fiber oil cleanup. It's a patented process that uses basalt fiber to clean up oil, gasoline, and diesel spills. The use of the patent qualifies for green technology credits. Now, basalt is an igneous rock. We're all familiar with it. Fiber is made from melting basalt and then in the cooling process, creating fiber. The basalt fiber can absorb up to 10 times its weight in oil. And once the oil is absorbed, it can be safely removed from the fiber. And then the potential market in this cleanup is hundreds of millions of dollars. So there was a little video put together. This is some crude oil that from one of the Texas oil wells, just put in a little aquarium, and then some basalt fiber is put in that aquarium. And you can see after 9-10 minutes that most of the oil has already been absorbed. The basalt goes to the bottom and then can be removed. Here's a small piece on the lower left there that has already been removed. When it's taken out, again, this is a 12-minute time frame. You can see that the water's not perfect, but it's pretty dang clean compared to what it was. And then you can literally squeeze the oil out of the basalt fiber and it can be used again. So again, this is something that we'd love to be able to put together. The patent owner is looking to sell 10% of the company for $1 million. Again, $25,000 tokens, 40 tokens for sale. Now, this is not an actual investment in the patent. It's an investment in a company that's been set up for the oil, gasoline, and diesel cleanup business. And this is one of those like all or none. This could be a 10x on your investment. It could be 100% loss. So that's what I'm about. That's what Thomas Meyer Investment Management is about. I found Klaus and Gabriel just 3 months ago at Consensus that was here in Austin, and have had great talks with them. Just onboarded, and I'm looking forward to creating all sorts of opportunities for investors as well as the average everyday person. Appreciate it. Thank you.
That was great. Ending on a bang. I love it. A couple of cool ideas in there. Very interesting use cases, and nice to see you tapping into the DigiShares ecosystem. Hopefully you can bring them to life and we can trade them soon enough. But that is all the presentations we have for today. So thank you everybody that came on today to speak about what they're working on and some of the use cases. I think there's a lot of activity happening here in the US, and like we sort of opened up with, DigiShares and other providers here can help make tokenization happen today. So there's no reason to wait. There's no reason to keep thinking about it. It's happening. It's a great time to get involved. So we look forward to working with you on your tokenization projects. But now we're gonna make it a nice little panel here to round up and finish up. I got a question for everybody individually, and then we're going to end on predictions for what's to come, specifically here in the United States, but also maybe in general about RWAs. But why don't we go ahead and we'll get started here. Gary, we haven't heard from you in a little while since you started us off, so maybe we'll kick it off with a quick question for you.
Sure.
So you're obviously an expert on the side of things when it comes to the regulation and possibly what's happening from a legislative look. I'm sure you're on top of it. So my question to you is simple. What's your take on any regulatory clarity that might be coming soon, if you think it's coming soon at all, and if it does ever pass, what do you think it'll look like? Do you have any kind of predictions or comments around that?
Yeah, that's the magical question, isn't it? What are they kicking around up on the Hill?
Exactly.
I think maybe after this election cycle, we might see some movement on some more solid legislation in the crypto space. I think the governing by sort of discipline isn't going to help anybody, and I think we're starting to see some things come through that will assist that space. For me, I deal with securities, and in the securities space, things are firm enough for me that I know how to do the right paperwork and tokenize things and get it done. So I'm quite happy with the legislation where it sits for securities, but where that intersects with crypto, it's not quite there, and I just think that a lot of some of the crypto has extreme utility, obviously, as a currency, but it also has the ability to sort of fleece the masses. Everybody that can create a coin can create an investment contract and an investment space. And I think it's better to have something behind that, like a security, like real estate or any kind of company, even if it's a startup, even if it's a risky company, it's at least something, and it's not vaporware. So that's why I like the security token aspect of this. as opposed to sort of the cryptocurrency, which is an entirely different world from really what I operate in.
Absolutely love that answer. You know, it highlights the fact that, again, everybody, that we have enough clarity in the United States to do tokenizations for securities, you know, specifically following those rules. So, you know, I think everybody in the United States would love the crypto markets in general, you know, just to have some kind of order, without a doubt. But there's no excuse for us to stop on the RWA front, on the real estate tokenization, on any other kind of securities and assets that want to follow the rules. You know, we're open for business, and Gary is fully capable of writing you the right legal documents to make it possible. So thank you, but really appreciate that, Gary. We'll get back to you about your predictions, but we'll give you some time to think on it. We'll move on to yeah. We'll move on to Gabriel or Klaus. One of you guys can answer this, specifically around the real estate exchange, around Rex. You know, it's an incredible project you guys have been building out. Can you tease us on any of the sort of initial type of offerings, or maybe type of real estate assets you're looking to sort of power? Obviously, you know, you guys are going to be focused on your ecosystem and DigiShares clients, I would imagine, to start. But do you expect other types of projects or outside, you know, partners to come in on this? Would love to sort of just hear more on all that.
Oh, Klaus, we can't hear you. I don't know if I'm the only one.
Yeah, no, it's a little low for some reason, Klaus.
Can you take over, Gabriel, while I'm working?
Okay, I guess I'll go until
you're getting tagged in. Go ahead.
The audio is solved. But yeah, so just as an example, on the Rex webinar we did yesterday, we had landlord token, which is one of our clients. They'll be one of the first to list. They're doing single family homes in the US, or even like small multifamily types of properties in the US, making them available to anyone, and we'll be listing on Rex. So we have a couple of other MOUs signed, and other discussions, and we're looking to grow from there. But there needs to be, of course, a link to real estate. I guess it doesn't have to necessarily be an individual asset. It could be a fund. It could be something adjacent. I don't know, like I was talking to someone that wants to potentially tokenize soccer stadiums. You know, so it's it has to be real estate related, and the SPV, the special purpose vehicle, has to be in the US for this initial launch, because it's US focused. Now the asset, that entity can then own something elsewhere, but the issuance, the SPV, has to be a US jurisdiction one. Yeah, I guess
Makes total sense.
Klaus, do you think it's working? No, still not working.
Well, regardless, you guys do have a fantastic webinar on the whole thing that everybody can go check out, or I imagine it will be published soon enough, since it only happened yesterday. So keep a lookout for anybody who's curious about that. My last question around that, because that's definitely helpful, is what about yield? Is that sort of a requirement, or given that there's a lot of appreciation plays in real estate, is that something the Rex will be accommodating as well?
Yeah, it's not a requirement to have a property that's yielding at the moment of the listing. We've heard from a lot of real estate developers that the tokenization use case brings even more value at the very beginning, when you're if construction hasn't even started, the time horizon for investors is much longer. And so the potential need for liquidity is greater. So you can have a deal that is just getting set up, and maybe construction hasn't even started, and tokenize it. Of course, you have to wait the 1 year for the 1 year lockup, but after that first year, you can list it, and maybe it's under construction, it's not yielding anything, but people could be interested, and the risk reward profile is different. You know, you're taking a bit more risk, but maybe you're getting more rewards for that. And at the end, you have yeah, maybe a better IRR. Who knows?
Yeah.
So we're open. Rex will be open to any kind of yield or
Yeah.
non-yielding properties. Could also be. I was speaking with someone that also wants to tokenize land, and so there would be no yield at all ever, and investors would get a return at the sale, and maybe the fund would
Absolutely.
sell, you know, every few months or something. So we're open.
No, it sounds like, yeah, as long as it touches real estate, like you said,
Yeah.
that's really great to be able to tap into all use cases, because there are so many. Even cool to hear, you know, kind of like construction bonds or pre-construction deals, getting in early. So you're really covering all types of real estate, folks. So if you're in the space, if you're tokenizing, you know, definitely this the go-to marketplace that you'll be able to use, it sounds like, as long as you're a real estate project. And we're going to stay on that topic real quick, and move on to Ashley, because obviously Real looks to be another big mover in tokenization for real estate specifically. You know, same question for you. Does the REIT have any kind of focus on a specific type of real estate asset that you're trying to target, or is it also sort of agnostic, and you just evaluate each deal on a case by case basis?
Yeah, great question, Herwig. Usually, REITs do have a specific focus, but for what we are doing, we thought that we'd make the focus a little bit more, say, neutral, but still with focusing on sustainable type of properties. So any property that is involved in sustainability, and we know obviously that a lot of real estate properties are moving in that direction anyways. But that would give us kind of still a focus without being pigeonholed into something. Our first property that we're going to be tokenizing is a $250 million hotel in Las Vegas. So, you know, we'll be jumping onto your little slide where you have the other the other companies of Red Swan and then Steel Wave, and hopefully we'll make it onto the slide next time. And the idea is obviously, as Gabriel's just touched on, but to potentially be able to list a REIT or individual properties through a REIT in the secondary exchange that they're building out. So yeah, very exciting stuff. Really great question, because REITs are generally focused, but I think for what we're trying to do in the tokenization, help with liquidity in real estate, we don't want to pigeonhole ourselves, at least out the gate initially.
I think that makes a lot of sense. I think the idea of also supporting other REITs and just this focus around the REIT model is underlooked, I think, currently, despite all the traction in the real estate space. You know, as we saw on that slide, nobody's talking, nobody's structuring, nobody's, you know, focusing on REITs. And the private REIT market is also massive. It's not just, you know, publicly traded big REITs.
Right.
So I think there's a huge use case you guys are targeting here. I'm
And they
excited
say,
to
yeah, and they
see.
say that people that the REITs, the properties go into REITs to die, and so we want to bring some life to that, right? And you know, people listen. I mean, they have properties, and they might, you know, I forgot who was. I think it was Thomas was saying he's a baby boomer, and you know, his generation is going to die soon, but they'll be leaving inheritance, and some of that is buildings. And, you know, we talk about factionalization, not just fractionalization, but factionalization. So you might have 10 kids or, you know, family members that inherit this, and they want to get out of it. They don't want this structure. They want this building. And how do you do that? And we really think that through our structure and through the REIT, we found a way of solving that as well. So, and we'd be excited to talk to. We're just starting, right? So we're going to be talking to a lot of people. And if anyone's listening and, you know, has any of those pain points, certainly don't hesitate to reach out. But thank you.
It's very cool. It's not just a REIT by what some people might interpret if they just hear the name. It really is real estate financial services as a whole ecosystem you guys are building out, which is super cool. We're going to keep moving on to some individual questions here. Sharon, let's go away from real estate, as you pointed out. And in general, we talked a lot about DigiX, but also the fact that you are, trying to support and empower female entrepreneurs and projects. Have you had any ideas around this? Does that intertwine within DigiX? How we might do that. I think tokenization is a great technology because it should make it much easier for people to identify or even automatically invest, sort of just say, hey, I'd like to, allocate towards female-led projects. Today we need, a portfolio manager or a whole team to help you kind of put that together. I think the future looks very different. I'd love to hear your thoughts on all that.
I have a lot of thoughts. I do work with a lot of other females in the space. I'll tell you guys a little secret. Women are the back behind all of the greatest investments, right? I mean, when investors go home at night, right, who are they consulting? The person over here, right, on the other side of the bed. And I think that it's time that we've given the tools that, in the past were only strictly for men, right, to women. And so I focus a lot on connecting women who are looking to invest, how to invest, what's the right investment, looking at it from a legal perspective, from a tax perspective, maybe even teaching them how to look at graphs, right, and how to read the market. And so that's something that I'm really passionate about. I think that it's important, and I do focus on onboarding a lot of these women onto our platform and our clients' projects. So I think that that's super important. I mean, I've never had any issue per se in this industry, the fact of me being a woman. It's more so about just empowering others that maybe don't feel like they have a seat at the table. So that's kind of the main focus. And I mean, I don't know if a lot of you know, but I used to own my own exchange. So I've never met another woman who has owned an exchange before. So it is possible. I think that people should just stay curious, explore. And I think we're all kind of exploring in this industry. We're just trying to navigate through the regulations and the different trends, right, in the markets, whether it's up, it's down. So I think that goes for everybody.
No, I absolutely love that answer. I want to reiterate that too, that, there are so many opportunities in this trend of tokenization. With Web3, we're talking about hundreds of trillions of assets, in all different use cases getting tokenized, service providers, entrepreneurs, fund managers, even as investors, there's new opportunities for us to make money. And I keep saying it is the best time to get into the space right now. So thank you for that, Sharon. Thomas, we're gonna move on to you next here. You definitely have a keen sight also on, I would say the retail thinking, if you will. And you got some cool projects you're working on there, but I was curious just if you think in general, what your thoughts are in terms of the market as a whole. We've seen the success of the treasuries markets, but now we've seen a Fed rate cut. And we might see potentially a less growth, in that sector. Maybe there's another asset class like real estate or, different private offerings that will end up dominating the market. What do you think on that?
I think it's going to end up being the same thing that has happened for generations. I have back behind me a bond certificate from about a 90-mile railroad in Pennsylvania. The bond was issued in the late 1860s, 999-year bond at 5% interest, and the company went out of business about 2 or 3 years after that. But the railroads were hot. You had the automobiles were hot. There were over 2,000 automobile manufacturers in the U.S. People that you don't think of your car as a technology, but that was the big technology. The airlines were the next big technology, then the personal computer, et cetera, et cetera. We're going to see a lot of things. Maybe real estate is hot right now, and it should be, because there is just so much of it. but who knows where it's going to go. I love the idea of intellectual property being something huge that can be invested in. A person that has, I have a friend who has some really interesting historical documents. He's not going to be able to sell those, but he could certainly tokenize those, and someone halfway across the world could have an important piece of U.S. history. I'm not going to say what it is because I don't have his permission to say what it is, but I think that we'll see all sorts of new waves that are going to come. What will happen is costs will be lowered. We're looking at low costs right now compared to our current technology, but I think costs will continue to drop even just over the next 3 years, 5 years, which will again open up more opportunities for more people. There's all technology becomes a commodity. So we are very early, to use the baseball analogy, we're in the top of the first inning with this tokenization of real world assets. It's incumbent upon us to do well. Those of us who have our businesses, we want to make a lot of money right now before everybody gets into it and cuts our costs to nothing.
Yeah, no, I really appreciate that. Yeah, it is the first inning. That's without a doubt. That's why it's a great time to get into it. And really anything is possible and what could take over. I can certainly say that last year, nobody was really thinking that these liquidity products, these treasuries would grow to this size so quickly. So I think, still 2 billion is a drop in the bucket in what's possible. So anything is possible in terms of what's going to take over. I appreciate that, Harsh. We're going to move on to you. You have a global career. You've actually, done finance across Europe and Asia, as well as, now focusing on the US and supporting the US. So I wanted to just kind of get your insights on that. Do you think that, the United States is going to be kind of the mainstay player in this industry? Do you think because of the, globalization and the opportunity within tokenization that some regions are going to kind of take over or take advantage of this to try to, be more competitive? What's your, as you're with your business, do you see yourself mostly focusing on the US because of that, or, globally? So love your input on all that.
Well, it's a quite heavy question to answer, but let me try my best. See, in simple terms, if you look, US has been leading the financial ecosystem for over 100 years probably. What that means is they would be slightly slower to adopt to newer, more disruptive ways. And the other ecosystem, namely Asia, Southeast Asia, have more pains to emerge out with better regulators, ecosystems, etc. So in a way, the dynamics are biased towards Southeast Asia, but knowing US and what it has done, it is not unexpected to believe that definitely they would make certain changes to catch up to the game. And when they do, they have the wherewithals, they have the momentum to quickly disrupt all the disruptors. I hope that is the answer that you're looking for.
No, that's really great insight for sure. I think what we're going to see to emphasize that is, other similar competing hubs, including London and Singapore and Hong Kong and Japan. They're definitely looking at this as hey, can we build better, more efficient markets than what exists today in America? And it'll be interesting to see if they're able to move faster than America being slow to catch up. So thanks for that. Klaus, you got your audio working, or are you going to get to skip out on the question here? I think we lost you. We're giving, unless you're pretending to talk just to skip out on the question. I'm just messing with you. No, and I just wanted to see if there was any highlights from DigiShares beyond the Rex platform. You guys are doing so much, because I know real estate was a big topic today, but it is not exclusively, you guys power a lot of platforms and offerings outside of of real estate. So I just wanted to hear if there was anything outside of the Rex that we should be aware of. Maybe Klaus or maybe Gabriel can help on that question, but otherwise we can just move towards predictions.
Yeah, let's do the predictions. The other main thing was the decentralized ID stuff that I actually spoke a bit about during my
which
presentation.
ties
So
right into the Rex. But
I
so it
won't
sounds like
bore
that
people
that
with
that Ditto. You're saying the Ditto will also be, you're not just doing that just for Rex. It is a separate solution that anybody else will be able to tap into and leverage that, new KYC as a token service, if you will.
Absolutely, absolutely.
For investors. No, that's really great to hear. Investor standardization and passporting, if you will, so that it makes it easier to tap into different platforms is critical, I think, for adoption. Obviously, the less barriers it is to be able to buy RWAs, the better. So that's definitely one of those annoying parts. So I'm excited to sign up and test it out and try it out myself. But since we're talking to you real quick, you're not talking to the official spokesperson of DigiShare Sense. We're talking about the opinion of we're sharing a drink down in Brickell, Gabriel. What's the deal? What's your prediction for next year in terms of, anything, whether it's market size or trends or whatever you think is the big thing for next year? And then also maybe for 2030, market size and just sort of what you think is going to look like for adoption then.
I think I have one interesting thought that I heard from someone that's much smarter than me. It was at Paris Blockchain Week a few months ago. And I can't remember who it was, and I'm sorry, but they were saying it was quite interesting. It seems like the market is starting with the most liquid assets and slowly moving along the scale to the least liquid. So if you think about it, like things, well, obviously crypto, Bitcoin, that was the genesis moment. But then the first real thing that was tokenized was cash with Tether and USDC, and that sort of exploded. And then now you're seeing these very liquid instruments, money market funds, US government bonds, just these massively liquid asset classes today. And so he was saying, you'll have maybe some of the larger funds that'll be the next big wave, and then we'll finish with the least liquid, like artwork or individual real estate. So maybe this means that we may have to wait a couple more years to see real estate really explode, just like the money market funds and U.S. government bonds are today. But I did find that very interesting to think about. So yeah, but I don't have a specific timeline, of course.
Makes a lot of sense regarding that risk curve. It's definitely coming up more and more now. But it is, of course, there's so many use cases and benefits of this technology beyond this promise of just liquidity, which I think is the kind of the big overarching narrative for RWAs. But then to your point, the things that are getting tokenized the most are actually pretty liquid stuff already. So that's kind of interesting. We're moving in reverse.
Which can seem paradoxical, right? But I guess it makes sense in a way, because it's less risky. You're taking less of a risk tokenizing assets that are already very liquid. In a way, because there's already so much demand.
100%.
Everybody knows about US government bonds, right? And whereas like an individual piece of real estate in Brickell, like, maybe we know it, but it's less famous. So
no, you can go from a treasury fund into a tokenized treasury fund into USDC instantly, and then from USDC into cash pretty quickly. As an example, so you can kind of go down the river. Final thing on prediction there for 2030, just give us a number. What do you think? The amount of tokenized assets by 2030 around the world, primary and secondary. Give a number for us.
Me?
Yeah, put it out there. Everyone's going to give a number.
Citi had a really thorough analysis, and I like their methodology. I think they came up with 4 trillion.
4 trillion.
Yeah,
The
so
Citi number.
I'll go with Citi on there.
It's all getting memorialized. We're gonna put this recording on the blockchain. You know, we're gonna go
Yeah,
back to
exactly.
this by
How much do I
2030.
get? What chunk of
Yeah.
that do I get if I'm correct?
Now you need to go to like a poly trade, one of those betting markets or something, right? But we're gonna go in reverse here. We're gonna go back to Harsh. You know, same thing. What do you think for next year? Like, what's the big sort of catch for tokenization? And then give us a number for 2030.
Again, very difficult question.
I
The
didn't say
volume that we see, sorry, you said something, Arvind?
I said I wasn't going to be an easy moderator. Go ahead. Go ahead.
See, my belief is the volumes that we see right now emerging into stable coins, all that liquidity would in near future flow into assets. So the analog of Gabriel, what he mentioned about highly liquid to more stable. So if I look by that logic, I would assume that it would be close to 10 trillion, but then this is just off the cuff. I cannot collaborate further on this.
Nice round number. We like clean numbers to be able to go for it. So I like that. I like that. And it's bigger. I'm an optimist. So, you know, bigger than what Citi and Gabriel think. All right, Thomas, what you got for us?
All right. Well, I think the number depends, of course, on how many baby boomers die and transfer assets. I'm gonna take the Price is Right format here, and I'm gonna go 10 trillion and $1. So I agree with Harsh. I think it's going to be larger, and it will happen more quickly than what we currently expect.
I definitely also agree with that. My personal is also much higher than what the analysts think. Next up, Sharon, what you got?
I was gonna be conservative and say 5, but you know, to kind of balance that out. So 5 to 10.
Okay. I like it. I like it. You're balancing us out. Maybe we should have had you go first. See what you would have said. All right. Next up, Ashley. Any trend predictions coming up, and what's your number for 2030? Number tokenized.
Yeah, it's ironic that I'm one of the last ones to go because we had a slide on it. So we actually put it in the slide. So in the slide, it just said that the real estate funds would reach 20 trillion valuation in 2030 and 1.5 trillion by 2030. So I'm at the lowest. I'll be with Sharon down there, and then the other guys, as well as you, Herwig, can take seats at the. And believe me, I hope you guys are right, and the stats that we came across were wrong. So I'm going to go with, and let's just double it. So I'll say 3 trillion, right? I mean, it's Price is Right here. So 3 trillion.
I like it. I can't wait to go back to this. But
yeah,
you heard it. Some people think as much as 20 trillion. How crazy would that be by 2030? Gary, we can't forget about you. Tell us.
Here.
The
Yes.
non-legal opinion. What you got?
My non-legal. Well, I've just consulted the great oracle of ChatGPT, and and the oracle tells me between 5 and 10 trillion apparently by 2025, and probably by 2030. It's the oracle is saying about a 10% of GDP may be tokenized.
Okay.
So Sharon is an AI, basically, is ChatGPT.
Because that was
her exact prediction.
or we're just
for investment advice. We're not advised, right? Legally, but it's good.
We're gonna have to register ChatGPT as an investment advisor over here.
They're using our data because we were right on the mix. Well, we all nailed it together. That's the power of this industry. It's a great time again to be in this industry because everyone loves to work together and make this possible. We all have the same vision of tokenized assets. Some of us with more optimistic success of the goals of tokenization here by 2030, but we all believe it in the trillions. Everyone that's listening, you know, that's what's happening here. This is happening today. The gold rush, if you will, of this century for tokenizing assets is off to the races, and it will be trillions. It will be tens of trillions by 2030, most likely. Very exciting to hear that from everybody. Klaus, I think you're probably still off mic, but want to give you one last chance. Say anything before we end it off here. All right, we're gonna mouth it and say, thanks everybody for coming, and I do want to thank everybody for your time as a panelist and as an attendee. All the great questions we heard. Can't wait to see this recording, everybody. We will get it. And once again, thank you to Klaus, Gabriel, Ashley, and everybody else on the DigiShares team, not just Ashley from ReReal, who's also, big thank you, but everybody on DigiShares for putting these together. It's always great. It's always great to hear the updates. And thank you everybody for those predictions. Reach out to us. You all have our
Thank you,
Q&A.
man. Thanks for
Thank you, Herwig.
moderating. Great job.
Thank you.
Yeah, thanks for moderating.
Appreciate it, Herwig.
My
Much
pleasure,
appreciated.
guys. Hope everybody has a great day and rest of the week. Catch the Security Token Show tomorrow.
You got it.
Happy
care.
tokenizing,
care.
everybody. Cheers.
Thank you.
Tokenizing.
Thanks.